Irrevocable trust with a holding company LLC, 65%, plus a trading LLC with 35%, with price appreciation of $1,000 value, runs multiples of lifetime gift tax allowance. Can creative mitigation reduce tax liability for trading LLC? I think so, maybe through a couple means. I'm hopeful, just like everybody else, that we get no capital gains on crypto for domestic digital assets. The only thing that's a domestic digital asset, in my opinion, is Ripple and XRP. They're the only company that stayed here onshore the whole time while Project Choke Point was going on, and they were in the lawsuit with the SEC, obviously. So will that apply to other digital assets? Again, hopeful, but irrespective, that would be one way. You can also elect that these are commodities. There's a different tax regime that's applied to commodities trading versus equities or other securities or capital assets, which is what most people consider crypto. So I would highly recommend, speaking with your CPA. The other way that you could mitigate taxes on the trading corporation, you would probably want to incorporate language in there to be able to convert crypto to real estate. The way that Fannie Mae and Freddie Mac have structured this, it looks like there's a possibility that if you're trading crypto for real estate, there won't be tax implications, or they're deferred, kind of like a 1031. So, there's a couple different means by which you'd be able to do that. But the trading LLC is in the business of trading. So there's not a whole lot of things that you can really do outside of like going to a trading seminar or education around trading or publications that talk about trading or different conditions that might affect your strategy. You could write off subscriptions to all of those things, or education, or travel to events where you're learning about that stuff. Buying, again, unless there's provisions in your operating agreement that allow you to do so, the purchase of real estate would be outside of your business operations. So I'd work with a good estate planner and tax attorney and possibly facilitate, adding that to your operating agreement in the trading LLC if that really ends up being the case on the real estate side. Some of the other things that you could do would be use the Augusta rule. What the Augusta rule is basically you can rent your residence or property that you own to your business at a fair market value and be able to not pay taxes on that and pay yourself out of the business up to 14 times per year. You need a narrative, right? Like it can't just be arbitrarily you rent your own house to your business and not have a documented reason or a contract. Like all this stuff has to be buttoned up. It's not like it's just arbitrarily cool. I did it and I paid myself. Like you have to have a legitimate reason to do it, contract between your business and yourself, all those things. So again, you want to work with the CPA, tax attorney,